right, let's do a quick mic check. I'm trying to make sure audio is coming through. Welcome, how are you? Enrique, hello. How are you guys? Okay, I think sound is good, video is good. We can start now. Okay, guys. Welcome everybody to the trading room. My name is Saul. Glad to be with you. Before we get started, as every week, remember we're gonna be analyzing, trading, managing trades in live market conditions. So anything I say here is not meant to be a buy or sell signal on any instrument, on any time frame. This is just the way I analyze the charts, and I read patterns, and I make my decision process. So you need to be responsible for your own trading and do not try to follow along. There's always delay from what I do live and what you see on your end. Am I missing something? I think we're good. On Mondays, as usual, we're gonna go through the major pairs, and we're gonna try to get a larger picture of what's going on in the market, what might be, opportunities for the week or for the upcoming weeks. Then if we have times and energy together, we might go to lower time frames and try to do some intraday trading or scalping or something like that. Johnny, hi. Mats, welcome. Elmer, how are you? Welcome everybody. Okay, with that being said, let's share my screen here. Just before anything, guys, if you haven't heard of or seen it or whatever it is, we're organizing this live event in the UK. I know it's next year, but start making your plans, start making those decisions to attend. This is going to be a pivot event on your career, so I can promise you that it's going to be packed with content, with good energy, with games, with prizes, with workshops, with a lot of rich content, purely educational, not sales and all these events where you just meet brokers that try to sell you something. It's going to be top speakers. We've brought high tier speakers, and we're bringing more over, so more will be joining. So guys, if you're in the UK, this is a no-brainer, and you should get your ticket soon. If you're in Europe, you should start making plans in order to attend. It's going to be very important in your career. Of course, if you're abroad, other continent, whatever it is, I know it's going to be probably more difficult. But if you're in Europe, UK, it should be a priority for your next year if you wanna take your trading to the next level. So that's like a quick shout out, and now let's move into our business for today's, and let's go quickly through the calendar. Last week we had a very busy week, and we spoke about it, and then we traded a little bit together. We got inflations, and we got interest rates, and we got non-farm payroll, all that last week, and we see how that's now reflected on the charts. This week it's quieter. Okay, so nothing very important for today, nothing very important for tomorrow, nothing on Wednesday. Then on Thursday we got CPI. Now the CPI, it's the inflation, kind of mirrors the inflation, or shows it's an inflation indication on the US. So more inflation means the Fed will try to keep raising interest rates to fight that, so that will bring more demand into the US dollar. But this should be already priced, okay? But just in case there's a surprise or something, we might see a lot of volatility. But we'll see what we got on the charts. And then Fridays, the GBP for the pound. Again, unless there's a large surprise, we should have already priced. And I think, large movements related to the US, they are, let's take the pound against the US, will be more driven by the US than the pound. So the GDP will have certain impact on the GBP, but GBP USD, the US dollar, will have more weight on that specific pair. So a relatively quiet week. Let's see our dollar index, how we're looking. We still on that on the uptrend, but start slowing down. Okay, we're not forming, like we still form some lower higher lows and higher highs, but now we're kind of stopped. We're just kind of moving sideways. We haven't established a continuation on the leg or a higher high or something like that. This could be only if this is the pole or the trend, this might be just the flag, the consolidation prior to a next leg higher. But I believe the US will start to slow down, and the next large movement is going to be to the downside on the US. So yes, there's a chance this will rest, find new demand, and explode higher, especially if inflation continues in the US and we see the Fed saying we're going with everything we got to stop the inflation, we will keep increasing interest rate wherever it is. So yes, we might see a continuation of this to the high side, but for past weeks now we have failed to continue. Okay, so during the uptrend, we kind of very quickly we had short consolidation periods before they move higher, and now we're spending more time on this consolidation before moving higher, meaning we might see finally a reverse. Let's see what's going on with inflation. We saw it slowing down. Okay, I've got an index here. So we got the peak, and now prices have kind of slowed down. Today we're kind of picking up again, but overall it's kind of slowing down the increments in prices. So I guess it's good. With that, let's move into our platform, and we'll keep our analysis over there. Francesco, I will be analyzing the major pairs, so the US related ones. If there's a request on a specific one or something like that, we can also do that with pleasure. Okay, so we got the Euro USD. Let me hide this for a moment. Okay, so the Euro USD usually looks like the opposite than the dollar index, and we see we had that downtrend, and we started to turn, okay, to break from that downtrend. Now, in terms of supply and demand, okay, and if we try to analyze what was happening during those days, we formed this higher low. This higher low. We attempt to break the previous high. That was kind of a false breakout, but those are the first signs that the downtrend wants to turn. Okay, and we spoke about the importance of the dollar starting to get above parity level and starting to to slow down and to get a bit weaker. This day was a crucial one, okay, because that was the day we were right at demand area on the hourlies. We analyzed that. There was a turn. That was the moment, that was the golden moment for the Euro USD to turn. And there was the speech Powell say we're going, everything we got, we're going very hawkish, and we saw the reaction, boom. So let's just look at that. That was, yeah, this day. So we're going up, and suddenly, boom, right now. That was the FOMC meetings. Yeah, it is this one. So we go up, and then just slam down, and then from there we continue lower a little bit. Let me go back here. But then from there we got into Friday, so that was a Wednesday, and then we got into, we got continuation on Thursday, and then on Friday we got, last Friday, the non-farm payroll, and we see this massive movement to the upside. So that was like a shock on the market, as shocking as to stop the previous announcement, which was this one right here. So it's hard to tell, with certainty where is this going, but my long-term view, the next fundamental movement is to the upside. Okay, a shorting dollar. Okay, euro buy, dollar sell. So the turning point didn't happen here. This might be the turning point. Okay, now for confirmation, we wanna see a break of that. I would really like to see a clear break and not another weak break, and we start forming now this kind of flag. Okay, but we might go into a consolidation to that channel. Everything is possible. Of course, as we get into the end of the year, of course, we will see the a little bit of slowing momentum. So this is a good time for the market to start going sideways before the next year and the new movement. But my bias for the market is going long, and that's true that stands for all the pairs. So if we go to the pound, same, we got the bottom, we formed the lower highs, the higher lows, and then we attempt to break again, reaction to the downside, and now Friday non-farm payrolls, and this should just pick momentum and continue to the upside. In this case, we already broke the last reaction. Okay, so if we go, so we already broke those levels, the levels from the speech of Powell. So there weren't sellers there, and I don't see a lot here to stop all the way to the tops. Of course, we'll see some resistance over there. So my current trade, I need to hold it at least, to the highs, to these highs, and from there, if I see we're picking momentum, we might see the break, and this would be a nice swing of this trade. I'll go back to this trade and I'll explain why I got into this trade specifically. So same for the pound, attempt to go down and then reaction to go up. If you guys are into candlestick patterns, so these are like classic engulfing candles, so tend to be like reversal candles. I'm not really into that, but if you like, those are good ones to spot because they are on the right context. Okay, I'll go back to gold a little bit later. USD CAD, again, these are dollar-driven movements. So we see the weakness of the dollar, kind of forming that, the head and shoulders pattern. That would be a reversal pattern. We are at the neckline. Okay, we got the shoulders, the head. We're at the neckline. For the pattern to get triggered, we need to see a clear break of the neck, and then targets, of course, at next demand, which is down there. Okay, so that's a nice, that could be a good setup as well. I'm not into this trade, but if I see a break and then the retest of the break and this becoming a new supply, so something like a clear breakout, and then the retest of not the line I wanted, then the retest of that area, then I would short. But I need to make sure the breakout area becomes a new supply area, so I can sell from. Okay, but on the dailies it looks like it wanna go to the downside. Aussie, inverse, reverse, head and shoulders. Okay, so we got the shoulder. Now we are testing again the neckline, and we're right there. Okay, if you're a breakout trader, you can try to place your buy stops at the breakout point. Myself, I'm not great at that, so I wait for the breakout, the confirmation, then the pullback to retest that area, and then I try to join. But this really looks like an inverse head and shoulders, so could be a good also buying opportunity. It aligns with all my analysis, with my fundamental analysis, going dollar short. Dollar yen, bit more complicated. For some reason we're not seeing that selling reaction as I would like. So if I stay with my dollar short, I would be shorting this. This is a very strong, very strong uptrend. So if we compare this movement down, more like a channel, and this movement up, this was with really nice impulses and pullbacks. So it's a stronger trend than this one right here. So I don't think to reverse this trend is going to be as easy as to reverse this trend right here. So I'm on the sidelines for dollar yen, so I'm not trading this pair at the moment. Gold and silver, in this case gold, dollar. Fundamentally, I want to be long on commodities and especially on gold, but I wasn't finding a reason to go long. Actually, until Friday, until this movement, I was this is going to break down, this is going to break down, this is going to break down, and I kind of Friday was kind of the movement I was waiting for to give me confidence to go long. Now I'm not long at the moment, but I'll wait for a little bit of more information, then a pullback. So I'm waiting for a little bit of bullish momentum. I need to see that momentum, and then a pullback to a new demand area. So let's try to find that demand area. Oops. Okay, so we got the mid demand area, and of course the the extreme demand area. Let's get rid of this one. Now let's go back. So now a pullback either to those areas. That's the areas when I want to start building my long positions. So that would be another one. Well, the camera is off again. Okay. Just let me clean this. Right. So a pullback to these areas, I will be happy to buy. Okay. Stocks. I'm more a buy the dip. I buy stocks. I don't really do a lot of trading, like active trading. But when I decide when to buy my stocks, I do look at the charts, okay, at the dailies, and then I start building my positions just for long-term opportunities. So as we see a turn on the Euro USD, the dollar finally weakening a little bit, more money will flush back into the stock market. Okay, with the interest highs, the stock market will need to perform better in order to give you a high return than you can make only on the having your money in the bank. But eventually, in the long term, I'm happy buying this, these pullbacks. I buy pullback, buy, and that's like my overview for the pairs. Now let me go to the chat a little bit, and then we can try to go and have a little bit of chat. Okay, so Mad, 1 of 3. I have a request. Maybe you would address the risk reward when scalping. I know you scale out if a trade turns against you. So my risk reward when I'm scalping, purely scalping, because I need to, separate my statistics from, more long-term trades where I really look into my risk reward ratios and all that stuff, from when I'm scalping. So my risk reward ratio when I'm scalping is break even, sometimes even negative, but I compensate that with a really high win rate. So I'm not really worried about my risk reward, because in the long term, as long as I'm getting into good setups long term, my expectancy is positive. So on scalping, you can expect a break-even or negative risk-reward ratio. That's normal. Okay, but you will still have a quite high risk compared to the potential reward. Maybe a 3 pip reward for a 30 pip risk. I really enjoy scalping. Yeah, so the 3 pip, I use the 3 pip like a standard on the euro, but there's a reason behind that. That's on the euro USD. If I'm scalping that, a price cycle on the 1 minute chart or the 5 minute chart is about 10 pips. So an impulse, okay, let me just go to the 1 minute chart. If we measure, let's say, this movement, okay, that's 11 pips. And if we measure, from pivot to pivot, that's 12 pips. So the average movement between pivot, okay, pivot point where the market turns, on the 1 minute chart on the euro is around 10 pips. So I take a third of that, which is 3 pips, as my predefined target. But I play with that because then I can make it tighter, or I can expand that depending on the where I should place in my target. If I was just, for example, okay, if I was just shorting right now, and my 3 pip target is here, and I see the market is about to break this area, then my next target should be all the way down here, okay, at the next key area. So that would be an 18 or 20 pip profit instead of a just 3 pip one. Okay, so my targets are based on key levels. Okay, they're not random. And my risk, you're right, it's very unlikely that I take a 30 pip loss. I usually, when I understand it's going against you, I need to take take the loss. I would take maybe 20 pips. You're right, 20 pips or 15 pips. But happens very, very rarely. Might happen, the 30 pip or 40 pip or whatever it is, happens if there's suddenly an announcement or a news or something like that, and then it goes against me. But other than that, I close manually my trades so they don't get as large losses. When it goes wrong, it goes really wrong and take a huge chunk out of my account. Would you say a little bit more about this risk reward ratio to be considered profit? Mats, I think there was some. I understand the question. Where's this all coming from? I did a webinar called Advanced Risk Allocation. So go into our YouTube channel and look for that one, and I'll see you find some answers to that. and of course to keep coming, and you will see me applying all that on live examples, so that might help you as well. Okay, but bottom line, a scalping technique by essence will have a negative risk-reward ratio and a high win rate. A swing technique will have like a 1-to-1 on both, or 2-to-1 on both, and then a position technique will have lower win rate but very high risk-reward ratio. Okay, so it's all about knowing your statistics. That's it. Mr. Leo, passing 3 rounds of challenge. How long will it take to sign a contract to trade real account? So it usually takes 1 or 2 days. If you haven't got yours, just send a ticket to support, please. Do you open orders on Mondays? Yeah, sure, because sometimes on Mondays, those are like my position trade. So like the one I got on. So it was taken off the one minute. I'll explain you the setup in a second. But there was the non-farm payroll and the push higher, and Sunday, or excuse me, Friday, it closed it with this bar. So after that bar, I was waiting for a pullback of this bar. Okay, now let's see. Okay, so that huge wide bar is this one. And then I was waiting. I was starting to build into the pullbacks, and then just continue higher. Lucian, really base rally structure on USD JPY. Rally base, rally. What time frame are you looking at, Lucian? Key levels meaning supply and demand levels. Johnny, so key levels might be sometimes are supply and demand, and sometimes might be just support and resistance levels. For me, for my targets, I try to get out before. Doesn't matter if it's a supply or a resistance level. I just want to get out before that. But yeah, those are key levels. The name of the scalping video was advanced scalping. No, something with risk allocation. I want to ask one more thing. How to hold on winning positions? I don't know, Grim, what do you mean? Like, what do you mean, how to hold? Like psychologically, how to hold? Or okay, guys, I think we can start trading. What do you think? So I've established my bias, okay, long on Euro USD. I want to be long. Now, if I go to the 5-minute chart, I want to be long as long as we are above that line. How far is that? That's 30 pips, okay. Yeah, psychologically, yeah, I understand the question. Psychologically, reducing your, I will tell you, reducing your lot size will help you with that struggling and urgency to hold your trades, okay? Because if you see a very small win, you will not have that like urgency to close the trade and to take profit, because the profits will be small. But if you have a very small win, then you will want it to multiply itself. Okay, so you will want to let it run so it grows. So reducing lot size might help you a little bit on those anxiety to close the trades, to close the trades quickly. That would be one advice. And the other one would be breathing. I can't stress enough how important is, breathing exercises. Breathing exercises will really help you calm down your mind, and might help as well. Okay, at this breaking point, we might see a little bit of pullback. On those pullbacks, I'll start building my yeah, that's a good comment, Lucian, as well. Of course, there's other techniques. You can take partial profits, all those techniques, but probably you know all those already. Okay, let's see if we got a little bit of pullback here. Yeah, you don't need any, special technique or something like that. Just practice breathing, just turning off phones, screens, whatever it is, and breathe every day before you're trading, during your trading, after trading, and that will help you calm down you don't have to go into, deep mindfulness or something like that. But okay, now just a heads up on my, what I'm planning. Okay, I want to see a pullback, and I'll start building some longs. Now, my first longs may fail and might break this level. Okay, so I'll have a mental stop for my first stops at this level. If we break this level hardly, I might reduce my lot size. I might take some partial losses, but my bias is still long, and my setup is still valid as long as we stay above these levels, around these levels. Okay, so so let's wait. Yeah, right now I need to kind of start selling. This is, we said on average, this is like the on average this is 10 or 11 pips. It's the average leg, so we're right there, and we're kind of meeting some resistance there, so we should start seeing the pullback I'm looking for. So I can either start selling, anticipating the pullback, or wait for the pullback and then start buying. Now we wait. Okay, let's see if there's some follow through. That would be the pullback I'm looking for. And then a pullback to that area. That would be ideal. And this is like a nice example of how to, while I'm swinging this trade, when I'm swinging this one, I will try to do some scalping on lower time frames. So that would be a nice exercise. No pullback, huh? kind of want to short, but if I short and that breaks high, there's nothing here. It will just continue higher. So I'm kind of scared of that. So I really want to be on the long side rather than the short side. Or I can take the short and just take my losses there. That would be like a 1-to-1. 7. No. Okay. A bit more. Okay, a bit early. Want a little bit lower. Okay, and around this area I want to see a turn. And remember, I have a mental stop there. Whoop, wait. Take one off. That was deeper than expected. Okay, now next key area. Is down here. Now you cashed out some of the profit. Are you always prepared to have first a bad entry and focus on just how to manage it? Yeah, pretty accurate, Lucian. That's why I always start very, very small, so I don't get very engaged with that trade, and I can manage it. And I start building. When I get into a nice area, then I build heavy. But my first entry, I'm always prepared to lose it. It just gets me into into the trade and committed to the trading. Okay, now imagine I was trying to catch the breakdown of this pivot. Okay, I'm going short. I got faked out. Okay, now I'm trying to go long. So sometimes only afterwards you will see if that was a good decision or bad decision. Come on, a bit more. Nope. Maybe this time. So I'm reading price action, and I see how it's faking out the breaking area. So I just want to get into a little bit of the 3 pips in my favor. That's it. So but it's not faking out. So if this suddenly gets momentum down, I also need to take a little bit of these losses for a small loss. Come on, turn up. Okay, there might be some continuation to the downside. There you go. One little one. There will be some resistance over there, so that's a good area to take another one off. So let's watch price action. Okay, there's the resistance. Let's see if it's another push from the buyers. And there's a new area there, okay? That's a kind of a little supply. So I want to get my targets below the supply area. And that's why I'm placing those right in there. Come on, bulls. Okay, and if price action is not with me, I can always take the profits. Okay, now I have 2 winning positions and 1 for a small loss, so that would still, like, as a position, make to be a winning one. I need to still compensate for the first partial loss I took, but I think if I close 1, 2, 3, I'll be already in the green zone. Okay, so that's fine. Come on, push higher. Okay, let's take another one. Okay, at this stage, I need to be prepared for another push to the downside. So I'm prepared for that. I'm fine with that. See tail activity on both sides, so it's a very market is not sure where it wants to go. Nice follow through. Let's take that one for break even. Now we can either take profits on that one. No, that's a good target area below the supply area, before the reaction. Or if we feel this is going to, or if we see this picks momentum to the upside, then yeah, let's swing it or whatever it is. Okay. Let's see how. Oh, sorry about that. Let's take a profit. So let's see how we did here. Okay, so I started with 2 trades here. I took 1 loss. That was 5 lots, 5.5. Then I took this one for break even, but I took 1, 2. Okay, so I took 1 for 6, 1 for 3, and the other one for almost 4. Okay, so so not bad, but that's kind of the principle. Okay, now if this goes down, okay, I start realizing this goes lower into a key area. Now at this area, I want to be active. Okay, I want to go heavier. But this is kind of the principle of, scaling in and scaling out of the trades. Now you saw how I took this trade off, and I had a mental stop. I realized that stop. Okay, I took the loss because in this case, the market turned around and went back into break even. But if you don't take the loss and the market continues lower, then you're in a much bigger hole you need to dig out. Okay, so I need to follow my process, which is taking a little bit of risk off. In this case, taking one position off, taking that trade out, and then with only one trade, I'm more comfortable managing that risk. Okay. So that's for today. Okay, guys, I think we're good to go. Just was like a little demonstration of what I do, and I just do that, like that example. It was what, 10 bars, so it was 10 minutes. So if you have like those, in a 1 hour, 2 hour session, you have multiple setups like that. That's it. That's your trading day. You make your pips. You're done for the day. And that's what I do on my own. I just go a bit high, higher lot size. That's pretty much it. Guys, I hope that made sense. If it doesn't, just keep coming. You'll slowly get it. Thanks for coming. We'll wrap up now. Lucian, the same thing you see here, I do it on my long-term trades. Okay, so it's the very, exactly the same, just on my long-term setups. It's instead of having 3 pip targets, I have 100 or 50 pip targets. But the scaling technique is the same. Thanks, guys. Thanks for coming. Thanks for staying. Wednesday, I'll have a joint session with Jordan. So we're trading a London session around 9 EM UK time. So join us if you can. That's it. Till then, thanks for coming. Thanks for staying. And bye-bye.